Hello and welcome to Pro Trader Strategies Market Commentary for Thursday, May the 28th. I'm Eric Wilkinson, and yes, you very well may recognize me as the Wolfman from mainstream media, where I've talked about the economic data and the overall geopolitical environment and how that impacts the overall markets with my market analysis. And I do that same thing in these daily market commentaries, but I layer on top of it options trading that I find in order to implement in and around some of the methodology I have come up with for implementing each specific option strategy according to that economic and geopolitical analysis and how that impacts the overall markets with my assumption that I come up with from that stuff. Well, let's talk about the economic data going across the board today. We have some pretty robust economic data, stuff that we've really been looking for. Yes, it is hindsight. It is a little bit behind us, but there are some really good economic data points to talk about today. We got durable goods orders coming in at negative 7.4%. That is lower than the expected, or higher, I should say, higher than the expected, because it was expected to be a negative 14. So that's kind of higher or better, let's say. And remember, that strips out transportation items. But then we've got durable goods orders that came in at 17, or negative 17, I should say, 17.2, and expected to be a negative 19. They did revise both of last month's number down slightly, but not really anything bad. So those numbers actually pretty decent, despite the fact that they're pretty horrible. I don't know if that's a silver lining there for you. Anyway, we got unemployment claims coming in at 2,123,000. Normally we would just be saying 123,000 or something like that. But we have that 2 million handle on there. Listen, people, we have, since this whole thing started, over 40 million people unemployed. That's just insane, you guys. And we're talking about all-time highs in the NASDAQ and a couple other ones, which is somewhat crazy. I get the thesis. I have the same thesis with the NASDAQ, but it seems like things could be getting a little frothy here. All right, preliminary GDP coming in line with expectations at 1.4%. Pending home sales. We just got new home sales. They knocked it out of the park pretty much for this type of environment. Well, pending home sales is not looking too good. And we are heading into the better part of home sale season. That came in at negative 21%. I think it's one of the lowest readings we've gotten for this number here. And it was expected to be a negative 15. So that continues to not be very good. Existing home sales doing well, but people don't want to buy a used home, I guess. I don't know. Anyway, natural gas storages coming in at 109 billion cubic feet, expected to be 113 billion cubic feet, and crude oil inventories a build. We were expecting a drawdown. Obviously, nobody was going anywhere. This number actually got bumped back to Thursday, both of these, as we had the holiday on Monday. But a build of 7.9 million barrels, expected to be a drawdown of 2.5 million barrels. So that is about 10 million barrels over what was expected. And that should be causing some weakness here in crude oil. I was actually, after seeing that number, thinking we were going to see the 20 handle again. Well, it's holding on to the 30s. We did sell off a little bit. Didn't even really come close to testing that 30 handle. But that is not a very good sign after especially having a pretty good holiday weekend. We would expect maybe a little bit heading into that where people were taking off the week before, things of that nature. So that is a little surprising. All right, so moving on, we don't have any other data to talk about. We do have Fed Governor Williams speaking today, so that is happening right about now. All right. Crude oil finally back into negative territory there, but it is near the highs of the day. I would expect to see some more weakness heading into crude oil throughout the day here going forward. We've got the gold futures moving higher. I talked about this. Holding on to that 17 handle would be what I would expect. I think we're going to hold on to the 1700, somewhere between 1700 and 1786 or 87 there is where I've talked about it wanting to stay. Bottom line, probably holding on to the 1658 if they were able to push it through that 1500. I think that 1660 area would have held, but we were able to make that big move higher towards the end of the day. Actually, people talking on TV right now, bonds, let's say that they're down close to a point, 2/3 of a point, but coming off, I do expect the bonds to start moving a little bit higher. We are starting to get a little overextended to the downside. I think that market is due for a bit of a pop. I sold TLT yesterday. Remember, I sold some short puts in there because I believe that we are going to stay in that bit of a range there. All right, the VIX is pretty much unchanged, slightly higher there. All right, yesterday I was talking about this and how it seems like there might be a bit of a sector rotation going on here where people are moving out of some of those techs that have done very well and are getting very near their 52-week highs, and some of them are even making 52-week highs. We not too long ago saw EA Sports doing it as well, which is in my portfolio, and we're seeing some of those moves, but now we're seeing some people pull out. I think they're taking profits off the table and moving into some more blue chip stocks to create a little bit more safe haven. That's kind of pushing up the Dow Jones Industrial Average, which is up 60 points. I mean, it's not a massive move, but yesterday we saw a nice big move in the Dow Jones where the NASDAQ was lagging a little bit. And it seems that NASDAQ is starting to push. We were in negative territory for the better part of the morning, testing that 9-day simple moving average and this 161 Fibonacci extension. Came and bounced off that pretty quickly, starting to make some moves now late in the day, or in the mid-afternoon, I guess. Not even afternoon yet over in New York. Maybe heading into the afternoon. All of the indices have moved into positive territory here with the E-mini S&Ps now up on the day. You can see pretty tight range here, but we are seeing that yesterday, soon as I got done with this daily market commentary, it was a nice big rally right into the close, unabated for the most part, into the end of the day. Overnight, pretty flat now. Our overnight tonight, last night, was pretty flat. You couldn't say, I'd say it was balanced with the longs and the shorts. But today, market really trying to digest these economic data points. Durable goods better. The pending home sales was pretty terrible. Crude oil was probably a wet blanket for most people, expecting that number to continue to drop. And with that build, it's not boding very well. So pretty quiet here today with the markets. It's probably going to be mostly just rumors and more COVID talk going forward. Something I saw, Jimmy Chill, CNBC, tweeted something out earlier today, and somebody was like, if I had to pick one or the other, would I pick Las Vegas Sands or MGM right now? And he said PENN. So we are on that PENN train. I think that during this whole coronavirus, they're probably one of the better ones set up for this type of atmosphere because they got into Barstool Sports. And, love him or hate him, David Portnoy is knocking it out of the park during this coronavirus lockdown. He has these, I think he stopped the unboxings now, but he was having 50, 60,000 people watching him unbox for 2-3 hours. I mean, that is going to help PENN overall as he's talking about that going forward. And now he's day trading. So it's pretty comical. Anyway, I just saw that headline. Otherwise, I'm not doing a whole lot. We've got TLT. Like I said, I'm trying to hold on to this. I played it for it staying within a range here. I still believe that. But if we break down too much further, I might be pulling the ripcord on that one because I don't want it to happen too quickly, too fast. And Disney really starting to suffer after opening up yesterday. Mostly, I think this is because there were some other places overseas, and I can't remember exactly which one it was, but they started opening up very similar to what Disney was, and they started seeing a spike in COVID in and around that area, so they've already shut down. So I think that that is fear falling into Disney, which I am long, but I'm long from since pretty much before the pandemic, unfortunately. But I've ridden it out, dollar cost averaging, continue to do that. But I think Disney is probably a hold at best, and I have considered pulling the ripcord on this one as I'm free falling on it. Just keeping you guys posted as to what I'm doing. That's about all I got for you guys. Other than we got to take a moment to go over this beautiful disclaimer, and it talks about that I'm here to teach you guys how to implement option strategies into a portfolio. We didn't talk a whole lot about that today. I'm actually long PENN because the options are not according to my rules. And, I bought it at $5 and it's trading 33 now, 34. So that one I just went out and bought and threw into my IRA. But it's talking about how building a portfolio, and that's what we've been doing in the current webinars, is implementing options into our portfolio. And it's kind of like based on what I happened with Walt Disney selling puts in there. It got the stock put to me. So what do? We start selling covered calls against it, or selling some further out of the money puts and dollar cost averaging and stuff like that. That's how you build a long-term portfolio. And that's what I talk about doing in here. In Disney, I am long at 227. It's trading 218 right now, 218, 219. And I'm short the 130 calls in there. All right, so that is trying to lower my overall cost basis on that trade. And if it gets up there to 130, I'm more than happy to have it called away from me. Why? Because in Disney, I've lowered my overall cost basis by continuing to stay mechanical with this. I sold the puts to get into this trade, and I've continued to sell calls. I sold like 145 calls in there, 160 calls in there, 130 calls that I have, and rolled them into a further duration 130 calls. So I've taken those on, or put those on, taken those off, and first blush it looks like I've lowered my overall cost basis on that by about $2. So I'd be happy to have that called away from me at that one. What is it? Have the Disney called away from me on this trade, because I'm short the 130 calls and I'm long at 127, so I'm long at 125. Still underwater on it, but that's how we stay mechanical in these times. And any time for that matter, you should always be mechanical and be implementing options into your portfolio according to your own risk parameters. And that is the precipice of what this disclaimer talks about. And please remember, past performance of any trading system or methodology is not necessarily indicative of future results. All right, so one other thing, last thing is today is a webinar day, so we're going to be talking about pairs trading, how you can implement options in and around a portfolio based on a pairs trade, trying to hedge some of our portfolio risk. I'll talk about that today on implementing options into our portfolio, the pairs trade. All right, so if you can't take that, take it easy.